Every country on Earth is in debt. The US owes $38 trillion. Japan owes $9 trillion. The entire planet is $315 trillion in debt. But the question that should keep you up at night is this: if everyone's in debt, who do we owe it to? The answer is darker than you think. When you follow the chain of creditors, you'll discover an uncomfortable truth. The world doesn't owe someone else. It owes itself. But four men, four bankers over 3 centuries, designed it this way on purpose. They built a system where debt can never be repaid, where governments borrow forever, and where those who design the trap profit from every crisis. Meetings were held, contracts exist, mechanisms are on public record. You'll understand why $38 trillion isn't a problem to be solved. The system is working exactly as designed. Let me show you the 4 architects, how the debt trap was engineered, and why every government on Earth is now stuck inside it with no way out. Before 1694, kings borrowed from merchants or nobles. If they couldn't pay, they defaulted. Debt was temporary. Either it got repaid or the system cleared. William Paterson changed everything. A Scottish merchant and financial schemer. In 1691, he had an idea that would reshape civilization. England was at war with France. King William III desperately needed money. The treasury was empty, and traditional lenders refused new loans because England had defaulted before. Paterson approached the king with a proposal. He would organize a group of wealthy merchants to lend the government £1.2 million. That's roughly £300 million in today's money. But here's the innovation. The loan would never be repaid. Instead, the government would pay 8% annual interest forever. And to manage this arrangement, Paterson proposed creating a new institution, the Bank of England. Here's how it worked. Merchants would deposit their gold into the Bank of England. The bank would lend it to the government. The government would pay annual interest from tax revenue. And the interest payment was guaranteed by Parliament, backed by the government's power to tax. As long as England could tax its citizens, the interest would keep flowing. The banknotes the lenders received could be bought and sold. They were as good as money. Parliament approved the plan in 1694. The Bank of England was established. And for the first time in history, national debt became permanent, not a problem to solve, but a feature of the system. The government was paying 8% annual interest on $1.2 million. That's £96,000 per year. Forever. The merchants had bought an annuity from the government. As long as England existed, the money kept flowing. The debt could be transferred, but never repaid. Paterson's real genius came next. The Bank of England was given the right to issue banknotes backed by the government's debt. They were creating money from debt. The government's IOU became currency. And the more the government borrowed, the more money could be created. This was the template. Government borrows, never repays the principal, pays interest forever, and the debt itself becomes money. Within 50 years, every major European power copied this model. France created the Banque Générale. In 1790, the United States adopted the same system. Alexander Hamilton explicitly modeled America's financial system on the Bank of England. Paterson died in 1719, but the system he built still operates 331 years later. The Bank of England still exists. British government debt has never been paid off. It's been refinanced, rolled over, expanded, but never eliminated. Do you think this system was designed intentionally, or did it evolve over time? Let's discuss in the comments. By the early 1800s, European governments had embraced debt, but there was no organized market. Each loan was negotiated separately, interest rates varied, and only the wealthiest merchants could participate. Nathan Rothschild changed that. He industrialized sovereign debt. The Rothschild family started as money changers in Frankfurt. By 1800, 5 Rothschild brothers had established banking operations in 5 major European cities: London, Paris, Frankfurt, Vienna, Naples. This network was unprecedented. They could move money across borders faster than anyone. Nathan Rothschild in London was a strategic genius. During the Napoleonic Wars, he arranged loans for Britain, but his innovation was how he structured them. Instead of lending directly to the government, he bought government bonds at a discount and resold them to investors at a markup. He created a secondary market. The government got its money quickly. Rothschild collected the spread. Investors got a tradable asset. In 1815, at the Battle of Waterloo, Nathan learned of Napoleon's defeat before anyone else in London. He used this information to manipulate the market. First, he sold British bonds, signaling that Britain had lost. Prices crashed. Other investors panic sold. Then he bought massive quantities of bonds at rock-bottom prices. The next day, when news of victory arrived, bond prices soared. Rothschild made millions. By 1820, the Rothschilds dominated Europe's sovereign debt market. When a government needed to borrow, it borrowed through the Rothschilds, because they controlled the investor network, the distribution, the terms. Before Rothschild, if a king defaulted, his creditors lost money and the system reset. But Rothschild turned debt into a global web. A bond in London instantly became collateral for a loan in Vienna. The web was so interconnected that a single country's failure to pay meant collapsing the entire international financial system. This was the Rothschild innovation. They made debt so interconnected that default became impossible. Not because governments were responsible, but because default would trigger systemic collapse. Governments were trapped. They had to keep paying, keep borrowing to pay interest on old debts. The debt trap was now not just permanent, it was inescapable. If what you've learned so far has changed your perspective, hit like on this video. Help the algorithm show this to more people. By 1900, America was becoming an economic powerhouse, but it had a primitive financial system. Banks operated independently, the money supply was tied to gold, and there was no central mechanism for managing debt. In 1907, a financial panic hit. Stocks crashed, banks failed, the economy froze. J.P. Morgan personally organized a bailout. It worked. The panic ended, and Morgan effectively became America's central banker. But he was 70 years old. He knew he couldn't do this again. So Morgan and his associates designed a permanent solution, a central bank. But Americans hated central banks, so they disguised it. In 1910, Morgan's associates, Senator Nelson Aldrich, and representatives from the largest banks held a secret meeting on Jekyll Island, Georgia. For 9 days, they designed the structure of the Federal Reserve System. The meetings were secret because they knew that if the public learned bankers were designing the nation's monetary system, there would be riots. The details of this meeting were hidden from the public in 1913. Today, it's on YouTube. Subscribe, because history repeats itself, and you need to see this. The plan was a brilliant piece of political manipulation. The Federal Reserve wouldn't be called a central bank. There would be 12 regional banks. It would be overseen by a board appointed by the president. It looked decentralized and democratic, but the structure ensured banker control. The regional Fed banks were privately owned by member banks, and the most important power, the power to create money, was given to the New York Federal Reserve Bank, controlled by Morgan's banks.
The Federal Reserve Act passed Congress in December 1913, and the debt trap expanded. Now the government could borrow not just from banks, but from the Federal Reserve, which could create money to buy bonds. Before the Fed, government borrowing had limits, but the Federal Reserve could create money by purchasing government bonds. The government issues bonds, the Fed buys them with newly created money, the government spends the money. This is the mechanism that makes infinite debt possible. The Fed ensures there's always a buyer for government bonds, so the government never has to stop borrowing. Morgan died in 1913, but his legacy is the structure that makes America's current $38 trillion debt possible. Without the Federal Reserve, the government couldn't borrow at this scale. The debt trap became infinite.
By the 1970s, the debt trap was operating globally. Every developed nation borrowed, rolled over debts, paid interest. But developing countries were different. They borrowed for infrastructure, and many couldn't sustain the payments. The debt trap was hitting its limits, until Paul Volcker made it permanent. Volcker was Federal Reserve Chairman from 1979 to 1987. Inflation was over 10%, and U.S. credibility was eroding. In 1979, he raised interest rates from 11% to 20%. the highest in American history. This crushed inflation, but it had another effect. Developing countries had borrowed billions in the 1970s when interest rates were low. Now loans were coming due, and interest rates had tripled. Mexico, Brazil, Argentina owed over $180 billion combined, and they couldn't pay. In August 1982, Mexico announced it couldn't make its payments. This should have triggered a global financial collapse. American banks had lent much of that money. If Mexico defaulted, Citibank, Bank of America, Chase Manhattan would take massive losses. Some might have failed. Volcker could have let the banks take their losses. He didn't. Instead, he orchestrated a bailout through the IMF. The IMF would lend these countries enough money to keep making interest payments to American banks. These were called structural adjustment loans. The terms were brutal. They had to surrender economic sovereignty to keep making interest payments. And the IMF loans didn't reduce debt. They just postponed it, made it manageable, but permanent.
This was Volcker's innovation. When debt can't be paid, don't forgive it, restructure it. Lend enough to keep interest payments flowing and extract political concessions in return. The debt trap became a tool of control. This pattern has repeated for 40 years. Greece, Argentina, Sri Lanka, every time the same structure. IMF loans, austerity, sovereignty surrendered. Debt is never eliminated, just restructured. Volcker died in 2019, but his legacy is the mechanism that made the debt trap global and inescapable. Countries can't default even when they can't pay. They get refinanced into permanent debt. So is there any way out of this system? The answer is more complex than you think. Keep watching.
Now let's put together how the four architects built the system. Patterson's model, government borrows, pays interest forever, never repays principal. Rothschild's innovation, make debt globally tradable. Default collapses the system. Morgan's mechanism, central banks create money to buy government bonds. Unlimited demand. Volcker's trap, when countries can't pay, restructure, never forgive. The result is what we have today. $315 trillion in global debt. Government debt, corporate debt, household debt. None of it will ever be repaid. All of it pays interest, and all of it is interconnected through the financial system. The U.S. government has issued $38 trillion in debt. About $20 trillion is owned by the American public, pension funds, mutual funds, insurance companies, banks, and the Federal Reserve. These bonds pay roughly $1 trillion in interest per year. That interest comes from taxes. Taxpayers send money to the government sends it to bondholders. Bondholders are mostly institutions owned by the wealthy. Every year, a transfer from workers to capital. If the U.S. paid off its $38 trillion debt, the money supply would collapse because dollars are created when the government borrows. Pay off the debt, those dollars disappear. That's why the government can never pay off its debt. It has to keep borrowing, keep rolling over, keep paying interest. The institutions holding debt profit from this. These asset managers control tens of trillions of dollars. They buy government bonds with other people's money and collect roughly $1 trillion in interest per year, not just from the U.S., from Japan, Europe, everywhere. This is the largest wealth transfer in history, continuous, structural, and invisible to most people, because it's not called a tax, it's called debt service. But it's the same mechanism. Workers pay, institutions collect, and the debt never shrinks. Do you think there's any way out of this system? Let's discuss in the comments. The four architects didn't conspire together. They lived in different centuries, but each one solved a problem in a way that benefited bankers, and each solution built on the one before. Patterson made debt permanent in 1694. Rothschild made it global in 1815. Morgan made it infinite in 1913. Volcker made it inescapable in 1982. Together, they built a system where governments borrow forever and pay interest forever. And the people who control the bonds, who manage the debt, who collect the interest, they are the ultimate beneficiaries, not governments, not taxpayers, financial institutions. $38 trillion isn't a crisis for them. It's a business model. Every dollar of debt is an asset on someone's balance sheet. It pays interest. It serves as collateral for more debt. And as long as confidence holds, as long as people believe the government will pay interest, even if the principal is never repaid, the system works. The debt trap is complete. No escape is possible, not without collapsing the entire financial system. 4 architects, 3 centuries, 1 system. And now everyone on Earth is trapped inside it. If this has changed how you see government debt, if you finally understand that 38 trillion isn't an accident or a mistake, but the result of a system working exactly as designed, then you're starting to see how power actually works. Subscribe if you want to understand how the machine was built and who runs it, because they won't teach you this in school. They'll teach you that debt is a problem to be solved, but the architects knew better. Debt isn't a problem, it's the foundation, and interest is the rent we pay to live in their house.